क्वांट म्यूचुअल फंड के CIO ET नाउ पे बात कर रहे हैं निकुंज के साथ। वो क्वांट और सिस्टम्स से भी मैक्रो और डोमेस्टिक डेटा को जोड़ के तस्वीर बनाते हैं। आइए सुनते हैं कि उनका क्या क्या राय बन रही है जिस हिसाब से मार्केट में ट्रेंड्स प्ले आउट हो रहे हैं।
Lower end, okay? So it's very clear that we have seen euphoria in growth stock and not the euphoria in general. So it's not be fair to say that the global market has peaked out. Yes, we are in euphoric space for global market. And if I have to conclude another important data point from that, from the liquidity perspective and money flow perspective and risk appetite, we can easily conclude that the easy phase of bull run is over. Okay, the bull run which we have seen, which is very easy month on month and week on week, people used to make money. That phase is definitely over. Okay, but we are still in a bull run. We are in difficult phase of bull run, but we are still in bull run. Okay, from the current context, let's look at. Okay, we have been slightly cautious for last 2 months or so. We have been talking about the VIX cycle inching up. Okay, so if I have to really look at the current data from a global perspective as well, India perspective, the India Fear Index is second highest after 2020. In terms of liquidity, India good liquidity is still rising. Risk appetite data point on relative basis better than global markets. Yes, it is towards the upper end and marginal drift we have seen, but largely constructive. So if I have to really conclude from multiple data points, have we seen a top of the market in India from a longer term perspective? Answer is clearly no. Okay, upside is still pending. We have not seen any classic signs of euphoria, which is required. Yes, we have seen euphoria in a small cap. We have seen euphoria in certain growth stock. We have seen euphoria in certain pockets. Okay, but that does not mean that we have seen a euphoric move in the Indian market as a whole. Okay, so we remain very constructive for Indian equities from next few years perspective. I don't think any of our parameters are giving indication that we should be worried about. Yes, the easy phase is also over for India, but we are in difficult phase. So sector rotation will play a very, very important role.
So we've covered a lot of points. You are of the view that the bull market is not over. You are of the view, based on your proprietary indicators, that even though it's been a 10% fall only, the indicators are saying that technically we are nearing a near-term trading bottom as well. And you are of the view that there is euphoria, but the euphoria is there in some of the growth stocks like internet companies or IT companies or some of the global so-called startup companies. Great point. So now let's take the conversation forward. Divide the market in three parts for us based on your understanding and your technical plus fundamental indicators. Stocks which you would like to buy in this decline. Stocks you would say, look, I will not buy them, but I will hold them. And stocks you would say, I would sell them.
Okay, so we don't want to talk about stock specific thing, but we can definitely talk about broader sector. So when we look at the first component we talked about, that obviously we will like to look at the value value portfolio. The weightage of the value portfolio should be significantly higher on the higher side. That's the first point. The sectoral themes which we like, despite we have seen a very massive correction happen in the banking space very recently, we like banking from the current level. So banking, capital goods, maybe media, textile, okay? And some of these names are still looking good to us. And we believe that India capex cycle has just started. The capex cycle typically are slightly long lasting. It lasts for 8-12 years perspective, and derivative of capital of the capex cycles are much more. So we remain very constructive on the overall capex cycle. So if you look at if I have to talk about the larger theme of value, then emerging market are also considered as a value relative to developed market. So I think the area should be value stocks. The way you define values, one can look into it, but the skewed towards value rather than the growth from the current levels.